Hey there, and welcome to this explainer. I'm really glad you're here. For our time together today, I want you to think of me as your driving instructor. Patient, but definitely firm. We're going to look at how to safely navigate these incredibly fast-paced financial highways. Specifically, we're diving into a vital market concept known as the 90 rule. It's this fundamental reality of trading that catches, well, pretty much every beginner completely off guard. So, go ahead and buckle up, check those mirrors, and let's hit the road. Think of this as our driver's ed syllabus for the day. We'll start with our welcome, unpack the 90 rule, figure out why new drivers crash, contrast reckless and defensive trading, go over 3 daily safe habits, and then finally, look at the long road ahead. All right, Section 1. Welcome to Driver's Ed, preparing for the financial highways.
You know, if there's a golden rule in our driving school, it's this. The financial market, it's absolutely not a get-rich-quick racetrack. I get it. When you first get your license, it's so tempting to just floor the gas pedal. You think speed equals success, right? But the reality is, the market heavily rewards consistency and patience over aggressive, thrill-seeking joyriding. If you treat trading like a drag race, your engine's going to blow out before you even hit the first mile marker. The steadier you go, the further you're actually going to get.
Moving right along to Section 2, understanding the 90 rule, the ultimate warning sign.
So this rule starts with a pretty stark, sobering reality about the people getting behind the wheel. The data actually tells us that 90% of new traders
End up completely wrecking their accounts, losing 90% of their trading capital.
And honestly, the crazy part is this all happens within their very first 90 days in the market. Now, don't get me wrong, this isn't meant to scare you away from driving. It's a widely known concept simply because it reflects a highly predictable reality of how beginners set themselves up for failure. It's a vital reminder that surviving out there depends entirely on a disciplined process. It's about actually following the traffic laws of the market rather than trying to guess the flow of traffic just out of pure excitement. That 90-90-90 rule, that's your wake-up call to avoid becoming just another statistic stuck in a ditch. Let's get into Section 3. Why new drivers crash, avoiding the early wrecks. Most beginners jump into the market laser-focused on how fast they can go. They just want profits, but they severely underestimate discipline, and that leads to some seriously reckless errors. Take over-leveraging, for instance, borrowing way more than you have. That's basically strapping a rocket engine to a bicycle. It is way too much power with zero control. Trading emotionally, pure road rage. Jumping between strategies is like violently swerving across 5 lanes without a turn signal. And ignoring stop losses, those automatic triggers to cut losses, is literally driving a car without brakes. Add an overtrading just because you're bored, and you're just driving aimlessly, burning gas, and massively bumping up your chances of an accident, all while chasing a quick buck instead of real consistency. Here's the kicker. Those early losses compound incredibly fast. But knowing this is exactly how we prevent it. See, most traders don't crash because their technical analysis is bad or because they don't know how to turn the steering wheel. They fail because they're missing a GPS, a solid treating plan. They aren't wearing their seatbelts, proper risk management, and they lack emotional discipline and patience. Ultimately, they're just distracted drivers in a very unforgiving environment.
Okay, Section 4, reckless versus defensive trading. 2 diverging paths.
There's a really sharp contrast here. Reckless drivers are out there aggressively chasing quick profits, right? They're tailgating the market and reacting emotionally to every tiny bump in the road. Defensive drivers, on the other hand, are protected. Professional traders stay completely detached from the market's daily noise. They ignore all the honking and traffic jams happening around them. Instead, they hyper-focus on long-term survival. They prioritize consistency over aggression to make absolutely sure they arrive at their destination intact, no matter how long the drive actually takes. Let's turn to Section 5, 3 daily safe habits, your pre-drive checklist. Before you even turn the key, you need a routine. So here's your daily pre-drive checklist pulled straight from the pros. Step 1, always wear your seatbelt. This means risking only a tiny percentage of your capital per trade and rigidly using stop losses to guard against fatal crashes. Step 2, strictly follow your route. You've got to use a structured trading plan that waits for fewer but much higher quality setups. No more stopping at every single roadside attraction. And step 3, log every trip. Keeping a detailed trading journal lets you review your habits, learn from those near misses, and track your overall progress. Stick to these 3 things and you drastically cut your chances of falling victim to the 90 rule. And finally, Section 6, the long road ahead, the ultimate destination. This is the major mindset shift you really need to make today. For professional traders, the primary objective just isn't rapid profit.
You have to remember, the goal of trading isn't crossing the finish line first. The real goal is arriving safely by preserving your vehicle, which is your capital. Think about it. If your car's totaled today, you can't commute to work tomorrow. By focusing on preservation and consistency, you make sure you get to keep driving, keep learning, and compound your success over the long haul. Like the pro analysts always say, trade smarter, not harder. Becoming a profitable driver on these roads has absolutely nothing to do with finding some magical, secret shortcut that nobody else knows about. It is purely about avoiding the repeated, totally predictable mistakes made by the reckless crowd. Honestly, by doing less, but doing it with extreme discipline, you're actually doing way more for your portfolio.
So, I want to leave you with a thought to chew on before you place your next trade. Ask yourself honestly, are you driving to arrive safely and build a sustainable future, or are you just out there driving for the adrenaline and the thrill? I really hope this explainer helps you keep your hands at 10 and 2 and your eyes locked on the road ahead. Stay safe out there, guys, and happy trading.